Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we are going over 10 different terms you are likely to come across from the terms and conditions section of bank account bonuses in your hunting journey. So we will go through these terms, talk about what they are, what they really mean, some examples, some use cases, why they're important. So basically, when you're going through terms and conditions on your own, you'll know exactly what they're talking about. So if that sounds interesting to you, of course, go ahead, press the subscribe button, and let's get to work. Now, no, right off the bat, this won't be the most fun thing in the world. However, terms and conditions are so very important in this game because that is the roadmap to take banks' money and make it into your money. They literally tell us exactly what we need to do to hit the bonus. So in no particular order, I've grabbed 10 different terms that you're likely to come across. Of course, if you have other terms you want to see in a part 2 of this, drop them down below. And of course, we're going to go through examples as we go. So the first term we're going to see a lot is direct deposit, right? Most bonuses go like, hey, open the account, make qualifying direct deposits in 90 days, and then you're going to get your bonus. So what exactly is a direct deposit? Well, the most pure form of a direct deposit is like if you have a job, if you're a W-2 employee, you're going to get paid a check, every other week. They deposit that into a bank account. That is a direct deposit from an employer. Now, other things do count too. They usually list like, hey, if you got Social Security income, something like that. Really, the things that do not count is the ones we want to focus on here, and more often than not, they will spell it out, right? So, when we talk about like spoofing a direct deposit, we're talking about like an ACH transfer. So let's say I have a Bank of America account and I want to do a Wells Fargo bonus and it requires direct deposit. Well, me transferring $200 from my Bank of America account to Wells Fargo technically should not count as a direct deposit. That is an ACH or a peer-to-peer transfer, if you will. That's really what they're talking about. Now, when you're doing this, crowdsourced data is the best route to go. Sometimes it's really the only data we have that, just because a bank says it doesn't necessarily mean it's true or that they've coded for it, right? But again, I will usually try to link down below to like Doctor of Credit articles where folks are posting their data points about this and what codes and what doesn't. Worst case to worst, we always say be the data point that you want to see. I don't love to do that. I like someone else to do it and I can learn from them. But overall, that is what we mean by direct deposit. Now, moving right along to the second term. This is going to be new customer. So what exactly is a new customer? Well, in the game of bank account bonus hunting, we say these things are churnable. Most of them are, which means, you can open it up, do the requirements, get the bonus, and then shut it down. Well, what they do is they specify that cooldown period, how long you have to wait. So if you take a look at city terms and conditions, for example, they would say you need to be a new checking customer, and then they will define what that means. Usually for Citi, I believe that you cannot have had a checking account in the last 180 days. Now, this does vary bank to bank. U.S. Bank is, 2 years. Citibank, much more easy to deal with. 180 days is usually the shortest amount I've seen, but it varies, and they should qualify it afterwards. Now, they don't always qualify. A lot of the smaller banks sometimes don't qualify, but the big guys, they generally say, hey, you cannot have had a checking account in the last 180 days, and then you got to be careful what they specify, right? Because sometimes it's you just get a new customer, right? It means no checking or savings account. Or sometimes they say new checking. So it means you could have had a savings account open, but as long as you don't have a checking account, you're good. These are just things to look for. And one other thing to note here, not exactly a term, but when we're talking about this, business banking, personal banking, consider them two separate things. Just because you have a business checking, if you're talking about a personal checking bonus, still eligible for that unless they specifically say otherwise. But 99% of banks, these are basically two different departments. So there's that. Now, next term we have here is going to be qualifying transactions. To hit a lot of these bonuses, you need to do something, right? Because they want you to open the account, they want you to use the account. So they'll say qualifying transactions. So is a direct deposit a qualifying transaction? Well, sometimes, right? Usually it's the requirement is, hey, direct deposit plus qualifying transactions. In that case, no, a direct deposit would be separate. Qualifying transactions are usually ACHs, again, so Bank of America to Wells Fargo example could count. Mobile deposits, so taking a picture of a check and depositing it. Peer-to-peer payments, so like they have Zelle set up. Bill pay, or the easiest one is debit cards. That's the one I go for if it is an option. And what I do for this one is, unless they specify a minimum, and sometimes they do, I will just go do Amazon reloads on my debit card for $1 each. Now, I think you can do them for as little as 50 cents if you want. I just do $1, so I'm doing this BMO Harris bonus. They said, hey, you need to have 10 grand in the account, make 10 debit card transactions, 10 Amazon reloads for $1 each. Done. Those are qualifying transactions. Now, I have seen bonuses sometimes that say debit card transactions don't count. It was a business bonus. It's rare, so you do have to read and look to see if anything is excluded. Sometimes it'll be written as like debit or credit, right? Because it's a debit card, not just debit card transaction. Sometimes there will be a minimum, sometimes they're not, but that's what we mean by qualifying transactions. Now, next one up, we have 1099 miscellaneous or interest. A lot of these bonuses say, hey, this is going to be billed as interest income, is 1099 miscellaneous or 1099 INT are the two forms you're talking about. They look the exact same. All this really means is that they are going to send you a form at the end of the year, a tax form that you have to include with your taxes. And if you get a tax form, there's also going to be one that goes to Uncle Sam as well. Now, on my other channel, I have a full video breaking down what is and isn't taxable. It does talk about this briefly, as well as credit cards, so I can link that down below for you as well. But all that means is you're going to get a form in the mail at the end of the year during tax time. Now, technically, anything of $600 or more, a bank has to send out a 1099 form. Anything less than $600, they can choose to send one out, but of course, obligatory. It's still income. It's always up to you to report that, even if you don't get one. So, do what you want with that. But that is what the 1099 requirement means. Now, next term we have new money. So, what do they mean by new money? Do they mean like a young baller out there has just become his own crypto millionaire? No, that's not what we mean. New money is new money to the bank. So, if you take like a Huntington, for example, Huntington, their bonuses are very simple. They're like, hey, just give us new money and then, hold it for here for so long and then, you'll get your bonus. So what you cannot do is say, hey, let's just say you have a Huntington savings account and the bonus is for a checking account. You cannot take $10,000 from the savings account with Huntington and move it to your checking account because that's not new to the bank. They have already had that $10,000. You're just moving it to accounts. They don't like that. What you would need to do is take the $10,000 in your Huntington savings, send it out to your Bank of America account, then send it to your bank, to your Huntington checking account. Now it's new money to the bank. That's exactly what they mean by new money. They just cannot have already currently be on deposit with the bank. You'll see that one a fair amount. A lot of time business accounts do this one as well. Business accounts are less about direct deposit because it's a business and more about just put in new money, hold it here for quite some time, and then we'll pay you. But that's what we mean by new money. Now, next term we have here is a quick one, but is deposit account. Deposit account is very simply put a checking or savings account. Now, there are different variations of this, and they'll usually break down which accounts are eligible for their bonuses, right? So you'll have, savings account, but then they'll have different versions, or a checking account with different versions. Sometimes, there's a money market account in there as well. Now, brokerages also have bonuses as well, but if you're on a brokerage page like a Charles Schwab or something like that, you'll know you're dealing with a brokerage account. So deposit account, really just a checking or savings account. And again, they're probably going to specify which ones are eligible. Now, next term we have here is micro deposits. So you probably won't see micro deposits in the terms and conditions, though it does come up from time to time. But micro deposits are really how you link two bank accounts together. So back to our example, if I have a Chase account and I have a Bank of America account, they're both mine. I own them both. I'm a primary signer. I can link them together so I can ACH money from one to the other and vice versa. The way you can do that is usually a few different ways. Some banks partner with Plaid, where it just allows you to basically sign in securely to link the account together. You can do that. But a lot of times the banks will say we still need to verify it, so they will send micro deposits to that other account. So it's like it'll be cents, or it'll be like 10 cents and 12 cents. There's usually two of them. They'll show up on that account, on that ledger. Then the sending bank will pull that money back. They don't send it from your money, right? So none of your money leaves. It's just kind of like a little pool that the bank uses to send deposits. Then you will go into bank over here, Bank of America, verify those deposits. See, I got 10 cents and 12 cents. Come back to Chase, tell Chase exactly how much they deposited in each one, and then the bank accounts will be linked. That's what micro deposits are. Micro deposits won't count as a transaction or a deposit or anything like that. It's literally just to verify the accounts. Next up, we have early termination fees. So early termination is a good way of saying I'm closing the account or shutting it down, right? So sometimes banks say, hey, if you don't keep the account open for 90 days, 180 days, I'm going to charge you a fee for early termination, closing the account. Some bonuses require you to keep the account open for so long. So what I try to do in the videos is say, hey, look, this bank says keep, like Chase Business, you have to keep the account open for 6 months or they will claw back the bonus. I do believe they will do it. So you always want to look for that. It might not be in the terms and conditions, though. It might be on something called a fee sheet with the bank, right? So if it's not a requirement of the bonus, but it's a requirement of the bank, technically they're a little sneaky and they put it on their fee sheet or rate sheet. That's going to go through and tell you all the fees associated to this account, and sometimes unfortunately they're hard to find. So again, that's where sites like the Doctor of Credit or everydatapoint.com come in handy, because people have sourced through this to find the information when it's kind of hidden, even though it should really be right there on a link, in my opinion. That's what we mean by early termination. Now, next up, we have 2 more. Maintenance fees. This is very similar to early termination fees. Now, a lot of times, again, this isn't necessarily tied to the bonus itself, but some accounts, they say, hey, we want you to do 2 direct deposits of $500 each and hold the money here for 90 days, which satisfies the requirements of the bonus, sure, but the account may still have account minimums, right? So again, if I go back to like my Huntington example, right? The Huntington one I did, they were like, hey, put in $15,000 and that satisfies the requirements, but the account minimum is $25,000 to avoid fees. So in that case, you just need to be aware that there is an account minimum, and if not, there's a maintenance fee, and then you just need to figure out if it's worth it to take the hit on the maintenance fee, or do you just raise it up so you're meeting the deposit minimum. Now, sometimes with these fees, they usually give you at least 2 months to get up to that amount, more often than not. Sometimes as much as 3 months. They don't necessarily expect you to have the full 25 grand, this example, right off the jump. And if you do get hit with an account minimum fee, sometimes you can call in like, hey, I'm sorry, can you reverse this? Usually they'll reverse at least one of them for you. But by then you should be getting pretty close to the bonus. And then sometimes, again, you can just take the hit. Like the Huntington one paid me out $500. I just took the $25 hit because I didn't really want to have that much money tied up in one account. So just one fee isn't terrible. And sure, again, you can always call in and get that reversed, hopefully. So that's that. Now, last one we have here is stackable. Stackable is an interesting term, right? So what we mean by that, or what they mean by that, is can I stack 2 bonuses on top of each other? Sometimes the answer is yes, sometimes the answer is no. So sometimes, for example, there's a referral bonus, right? So you get $50, I get $50, you use my referral link, and then on top of that, there's another bonus for like a direct deposit, right? Sometimes they're stackable, which means you can get the $50 for going through the referral link, and then you can get the $50 or whatever it is for doing the direct deposits or the transactions. That's great. Stackability is really good. We like that. Sometimes they're not stackable, though, and they specify this cannot be combined with any other checking offer. It's just a term you have to look out for in the terms and conditions. You see a lot of this with the neobank, fintech banks. Some of them you can stack, or some banks do have, well, we'll do a checking and a savings account for you, and you can do both, which is always a good pickup. So anyways, guys, there you go. Those are 10 terms that you're likely to encounter in your hunting journey. So, of course, if you have any questions about these, let me know down below. And if you want to see any other terms covered, maybe in a part 2 of this, let me know as well. We can definitely build that out. But anyways, guys, that's going to do it for this one. So if you liked it, drop me a thumbs up down below. If you found it particularly interesting, of course, consider subscribing to the channel. So we're posting content just like this on how to make banks money into your money every week. Again, my question for you guys is let me know what you think of these terms. What other terms have you encountered? Love to get a good list going for one-on-one videos in the future. But anyways, guys, that's going to do it for this one. As always, thank you so much for watching. I'll talk to you very soon in the next one.